Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Anushi Vakharia. And Anushi, at the back end and at the power generation end of things, there's plenty happening, and therefore the immediate large opportunity does not only sit in transformers but also sits on the smart metering side.
Absolutely.
And that's why we are bringing in Genus Power today to try and talk about that, therefore. It'll give us a perspective on the entire value chain, but more importantly on the front end, what's happening on the smart metering execution. And there's some very, very sharp execution happening. What probably Genus Power has not done its entire lifetime is probably doing in single years, literally a crore meters being set up, and thereafter the O&M. And the kind of growth that we're seeing here and the visibility of growth is extremely strong over the next 8-10 years. The order books are completely full. But really, there's one key problem. It's the cash flow, because a lot of these are government-tilted projects, and therefore cash flow unwind is taking a while now. And due to that, what is also happening is the debt of the company has gone up. So I want to understand both of those factors. Will the cash flow come through, and how quickly? They've guided that FY27, FY26 will be a positive year where operating cash flow is concerned, is what they've said. FY27 is when the real unwind in a large fashion will start. And what they're also saying is there's going to be a tilt towards O&M, which is on the maintenance side of things. So when you have that tilt coming through where O&M is concerned, your cash flow realizations will improve automatically, is what they are saying. Now, in terms of the third piece that I want to understand, it's on the smart metering side. They've said that they'll set up 80 to 90 lakh smart meters. That's the guidance. The current capacity is at around 1.1 crore odd, and maybe more than that. But my point is that that will continue to go up. The guidance seems to suggest that by FY27, the smart metering in terms of units will be at 1.1 to 1.2 crores, so which will be sizably larger than even the guidance for FY26. So growth here is going to be extremely strong. But can there be upside in FY26 itself? And we're seeing signs of that. The order book is at 30,000 crore. I did speak about that. I want to understand product versus O&M. What's the split going to be like as the growth continues to kick through here? Because the visibility is clear. So therefore, trying to understand what the split on the order book side of things is and what the revenue recognition will be like, maybe once things start to stabilize a bit, because they are in a very, very high growth phase. Now, let me also talk a little bit about the new opportunities. There's gas, there's water. Again, both of those are on the metering side of things, and those opportunities are also fairly large. I also want to understand, and this is obviously an extension to the gas as well as the water opportunities. But outside of that, whether they're looking at any other opportunities and opportunities in the export space, I would be keen to know whether they are seeing that or they're only looking domestically. Currently, Anushi, they're pretty much entirely domestically focused. Absolutely. But the export opportunity could well be large. And how much of that are they looking at, or are they looking to tap into, is really the other piece I'd want to know.
They're already eyeing some key geographies that are there, that includes the Middle East regions as well as Africa. So, you know, we
Australia, New Zealand as well.
Oh, that's
so
interesting.
All of that, so all of that is what they're targeting, and therefore you could well see some of those opportunities actually translate. And the last piece is, can margins scale up, and what's the capex like? Because obviously with such strong growth, how are they planning all of that? And therefore, as a result of this, again, I'll go back to that earlier point on debt, on how they are expecting debt to play out as well. So all of that is what we'll try to cover today on KYC. But let me first start off with about the company, and let me hand it over to Anushi to start that off.
Well, thanks for that. So, as you know, we just started off the show with talking about smart metering solutions. Now, the company is one of the key players in this particular region that we are looking at. And this is mainly for utility side of the business that we are looking, that the company provides it. Now, diversifying in water, gas as well, which brings to our second point, you know, about what the company essentially does. It manufactures and deploys, the deployment is for electricity, gas and water meters. That is what we are looking at, with this being the upcoming opportunity for the business. It also focuses on advanced metering infrastructure across India. It has platforms like GIC as well, which it had tied up in 2024, from which now it is driving substantial portion of its revenues as well. Now, if you just look at the overall opportunity, also 99% of its current revenue is government linked, as Harsh spoke about earlier. But I just want to draw attention to the fact as well that, you know, India is also targeting installation of 30 to 31 crore smart meters, and this is by FY 30 to 31 that we are looking at. Current installations that we've seen so far is 3 crores, and about 14 crore of orders have been placed. So Harsh, that you know emphasizes on the kind of opportunity that is there in these upcoming years. But you know, in terms of product mix, let's just walk through that as well.
Well, yes. So let's start off. The smart electricity meters, we spoke about that. This, of course, what it does is it measures, uses, enables remote reading stroke control. That's broadly the use. Then there are prepayment or net meters where you pay before the use, and net metering is especially also used in solar. You have smart or grid meters used for power infra, large grid meters, and it enables for grid accounting as well. Where have the units gone, and whether there's a reconciliation between units, again important. Then you have a new product line, smart gas and water meters. This is used by city utility companies for households as well as offices, of course. And then you have advanced metering, which is data management, analytics, billing, apps, and the like. So the entire ecosystem is evolving, and it's evolving fairly quickly, and it's evolving countrywide. And that's where the opportunity really comes from. The product mix currently is fully tilted towards electricity. 95% plus is electricity, and a major chunk of that is bulk orders from the government. They hardly ever do too much of private, but the opportunity is there on both sides. There's early revenue that we're starting to see likely in FY26 from gas and water meters as well, and advanced metering solutions as well. So all of those will also start to contribute to the top line. I just want to quickly point out that Anushi and me were discussing in the morning in the newsroom that you know, the order book size is 30,000 crore. And the top line is just at 2,400 crore. The guidance for FY26 is 4,000 crore plus. Now, even with that, the kind of visibility of growth and demand is extremely strong, even at 4,000 or even at 5,000 crore, because it's a far cry from the 30,000 crore order book they're sitting on. Maybe some part of that is maintenance, but just the opportunity is that large, continues to be that large, and already sitting in orders booked is also large. And the possibilities of a default on these orders is very, very low, because all of them are driven by the government. But let's quickly talk about the metrics. And the metrics, we'll stack it up, 8 of them: income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, and we'll have valuation as well as outlook within this. So that it gives you a lens into how to look at or what is it that the management is already guiding for. And thereafter, we'll speak with management. So that will give us a good perspective. Let me allow Anushi to start off with the income statement.
I think this is the most exciting part that we are looking at in these key metrics, because the kind of growth that the company has showcased in this last 3 years period, if we see. Now, revenue, CAGR, if you're just looking at 53% is what we are seeing, but EBITDA even more impressive at around 99%. And this is with margins escalating from 11% to 19% or odd. So the company now planning to maintain its margin at the levels of 18% or odd. So that's the sustainable range that it looks forward to. Net profit also, we've seen about about 120% of a growth in this 3 years. And this is essentially a part of the order book that we are looking at just from FY22 to FY25. If we see the shift in terms of order book, what was a 1,080 crore earlier with about 2 times of a book-to-bill ratio has now significantly increased to about 12 times of a multiple that we are looking at. This is with almost a 30,000 crore order book that we've seen at the end of FY25. The main pickup that we've seen is from FY23 to FY24, from 4,000 crore to 21,000 crore. Just want to understand a bit more on this in detail as to what has led to the significant uptick in terms of order book. Is it with the GIC partnership that we are looking at, which has driven this orders, whether it's with the opportunities and the scale that we've seen in the last 2 years, but very interesting piece nonetheless to look at. In terms of key operational metrics also, if we see, the company sold about 9.44 million of meters in FY25, this is in comparison with about 4 million meters that it did sell in FY22. Even the cumulative meters installed has now increased to 99.5 million as compared to 81 million in FY24. And annual production capacity in FY25 reaching to the scale of 1.6 crore meters in comparison with about 1 crore which it had maintained in the last 3 fiscal years. So, Harsh, just to start off, very strong numbers that we are looking at in terms of income statement as well as the order book also. And the execution part of it would remain exciting for the business.
Well, yes, absolutely. But do they have the balance sheet to execute that? So let's pull up the balance sheet and get a better perspective. You're starting to see an inch up when it comes to 2-3 pieces in the balance sheet. The book value is currently standing at around 1900 crore. That's trading at around 5 times book, by the way. So something to keep in mind. But outside of that, when you're looking at the way in which borrowing has gone up, you might be a bit concerned. But a large part of that is linked to inventory and receivables. And I'll showcase the way inventory and receivables have gone up. Inventory was at 280 crore in FY23. Currently sits at 850 crore at the end of FY25. Of course, maybe not Q1 FY26. Also, you look at trade receivables at 470 crore in FY23. Currently at, or rather at the end of FY25 was at 1365 crore. You've seen 3x jumps in some of these numbers, and that's what's creating a drag on the balance sheet. And therefore, your liabilities is having to increase very, very sharply because profit is not enough to fund some of these working capital requirements. So your borrowings have gone up sharply as a result. You're seeing the borrowing number at 1365 crore. And then you also have a decent amount of cash in hand. So that's where you feel somewhere that it's well placed, because even after that increase in the borrowing, you're still seeing a debt to equity of around 1:2. So which is quite decent. And this could well unwind also fairly quickly. 800 crore of receivables could well unwind pretty much very, very quickly, maybe over the next year or two, and we'll understand that. And therefore, we for now have given it a thumbs up, but it's a wait and watch. Cash flow, Anushi.
Well, this is an important metric to look at now, considering what's happening with cash flow from operations. If you're looking at FY25 and or even FY24, we've seen a negative operating cash flow for this, and this is majorly a work of receivables that we are seeing. In fact, if you just look at the number of receivables that is there, that has picked up from a negative 113 crore to 822 crore as of FY25, and a lot of part is also tied to the net working capital which is there, which has also increased over the years. Again, we've already seen a substantial increase in terms of sales, but how cash is going to work out for the business is something that we should be seeing, considering that the management does expect that cash flow to be positive in FY27, but still this remains as a concern. In terms of the net cash flows also, if you look at that, stood at about 235 crore in the negative as of FY25 end. So very important to see how the upcoming years would shape up. Now there's a lot of pre-installation works which are currently going on in terms of the smart metering orders that the company has, which has resulted to higher investments as well. So a lot of areas, Harsh, that we are seeing in terms of cash flows if we are looking at.
Well, yes. There is some work to be done on this metric for sure. I believe management has acknowledged it already. So we won't delve too deep into this one any further. Let's talk about return ratios. And when you're seeing the return ratios, they've inched higher. And as that unwind happens with regard to cash flow and profitability, it likely will continue to inch higher. But we want to wait and watch for both cash flow to play out as well as profitability to play out. Return ratios likely to inch higher. Some capex guidance will help, of course. But till that working capital requirement doesn't shrink, you will see some way down on the ROC number due to the working capital, no other reason. And therefore, that will hold the key. We want to wait and watch for that one, and hence given this a neutral shareholding. Anushi.
We've given this one a neutral as well. Now, in terms of promoter stake, if we are looking at now, in the last 2 quarters, it has maintained at the levels of 39% or so from 43% that we'd seen in March 24, while FIIs, the stake has increased from 17% to 20% in this last 1 year period, while DIIs continue to hold about 4 to 5% stake in the company. It's the public shareholding which has also remained at the levels of 35 to 37% there. So Harsh, no major or dramatic changes that we are seeing in the shareholding pattern of Genus Power, right?
Yeah, not really, and therefore we've given this a neutral. It's
Right.
sub 40%, but it's holding steady. Let's talk about the street cred, and when you look at the near-term performance, it's been choppy, but the longer-term performance has been stellar, as one would expect. Just given the numbers, it's been such phenomenal returns that this one has given to investors. Over the last 3 years, it's been a 4-bagger, and therefore extremely strong returns. What I would want to see, therefore, is can it sustain the kind of returns it's giving maybe over the next 2 to 3 years, and guidance will determine that, of course. But you want to talk about, let me also in fact take street coverage.
Yeah.
And just about very few analysts cover it, understandably sub 10,000 crore in market cap. 4 analysts cover it, 33% upside. Just out of caution that there are very few analysts that cover it, we've given this a neutral as well. We want to be conservative in some of the metrics we use. Valuations and outlook, Anushi, I'll leave that to you.
Well, for valuations and outlook, we've given this a thumbs up, given the kind of growth that we've seen in the income statement as well as other ratios. Now, if you just look at the P multiple, currently trading at around 26 times, and this is expected. The 2-year forward picture is around 18 times, which is quite similar to what its peer does, HPL Electric, which also has a similar vertical in the smart metering that we are looking at. So this one is a thumbs up, but it's the outlook which is interesting going forward. Now, if you look at the order book, as of July end, that stood at 29,000 crore. FY25, we saw this figure at around 30,000 crore or so. But it's a tender pipeline of 27,000 to 28,000 crore, which is expected in the next 6 to 8 months, which continues to remain interesting considering that the company almost has a 25% of a market share. Even the revenue guidance of 4,000 crore, which showcases about a 64% of growth, is to be revised as per the management's commentary that we are looking at. And this is on the upside that we are seeing post the H1 con call that we'll see. This is with margins maintaining at 18%. So Harsh, interesting data set that we are looking in terms of the outlook as well.
Absolutely. So let's stack it all up and give it its KYC rating, and it therefore, on the back of all of that, cash flow only being the possible concern here, and that will be the first question I ask Mr. Jitendra Kumar, who's joining us. But 5 out of 8 is what this one gets on the KYC rating. Mr. Jitendra Kumar Agarwal joining us. Mr. Agarwal, joint MD at Genus Power. Sir, let me start off with that crucial question on cash flow. I do understand that you were listening to us for the last few minutes. Talk to us about how quickly can it unwind, and what will be that year in which we'll start to see that unwind happen?
So, hi, good morning.
Good morning, sir.
Everyone. Just to give you a heads up on the business, that will give you a good idea why this cash flow is concerning everyone, which doesn't concern me at all. So this is a smart metering business, which is a AMISP work, what we are doing currently. In AMISP, the arrangement what we have done with GIC, the platform what we have created, the Gemstar platform, is going to fund all these projects. How they initially, all the investment is to be done by the listed company, Genus Power, because the complete back-to-back all work is done by us. So initially when the project is started, we have to supply the meter, then we have to integrate the software with the billing system of the utility, and then the operation go live is received by the company. Only after that, you start receiving the payment from the utility, which in turn we get the complete capex payment from the Gemstar platform. This is the arrangement we have done. So since all the projects have started in last 12 to 18 months, you will see a lot of these projects are achieving operation go live. Few have achieved last month, a lot of them will achieve in next few months. So by the end of this financial year, we are more than confident we will be positive in the cash flow, and all these data, what you are seeing, all this investment in the inventory, what you are seeing, which is very high. Right now, in terms of numbers, it will go up, but in terms of percentage, you will see them going down significantly.
Mr. Agarwal, hi, this is Anushi joining as well. You know, you just spoke about that a lot of orders that are there currently, they're in the pre-operational phases, which requires this higher investment. But just on that, you know, want to understand, even if you look at the order pipeline, now that continues to remain on the higher side. So the expectation of more of these orders coming in. So considering that, wouldn't there be an issue with the cash flows going forward as well? Because currently you've guided for a reduction in terms of either net working capital days as well. But just want to piece this all together and understand your outlook on the same.
So if you will see last 6 months, number of days of net working capital has gone down. So this trend is very visible in the balance sheet. So you will see this considerably going down, and by the end of this financial year, we are pretty confident that we'll be cash flow positive. And with more and more new orders coming in the next 6 months, you will see a lot of old orders reaching a very good operation go live stage, and they continuously, whenever we are supplying the meters, installing the meters, once operation go live is achieved, then your cash flow becomes much positive because we are getting paid capex by the platform. So the arrangement of Genus is very, very interesting arrangement, where we are initially investment is done by the listed company, and afterwards all the investment is done by the Gemstar, and the listed company achieves the complete payment for its all the meters being supplied, installed, and integrated with the billing system of the utility. That is why I'm more than confident that we will be cash flow positive by the end of financial year.
How much will unwind, sir, out of the net working capital that you're talking about? How much of that will unwind in FY26?
So in terms of, if you will see in the current stage, almost you will see in terms of loan and in terms of order, in terms of inventory, we have in debtors almost 800 to 900 crores are stuck, which you will see all this will get unwind in next 6 to 7 months. So that will make us very positive over the period of time.
Understood. And sir, talk to us about the split as well. So on the 30,000 crore order book that you have, 29,000 crore odd, what's the split between O&M and what's the split between product? Because O&M will probably stretch over a decade or so. Is that the right way to think of it?
Yes, 7 to 8 years.
Yes. And what's the split like, sir, on the 30,000 crore order book? How much is O&M and how much is product?
So just to give you an idea, so Genus is the only metering solution company which is also doing its own AMISP. We not only do our own projects, we also supply meters to almost all the leading AMISP in the country, and also we are the largest suppliers to all the utilities. It's not that the utilities have stopped buying meters. So to give you a clear idea of the breakup of this order, let's take a ballpark figure that Genus has an order book of 29,000 crores. Out of this 29,000 crores, 2,000 crores are supply orders, which we are supplying material to our AMISP partners, to our utilities, export orders, all put together is around 2,000 crores. Remaining 27,000 crores is the AMISP business, which we get from the platform. So 27,000 crore order book is received by Genus. Then we transfer this order book to the platform created by Genus and GIC. And from the platform, 80% of that value comes back to the Genus as a EPC. So 27,000 crores is the order book that goes to the platform. From out of this 27,000 crores, 80% revenue comes to Genus Power, the listed company. And out of this 80%, 55 to 60% is supply and installation, which will happen in next 2 to 3 years, and remaining 40% is O&M, which will happen for 7 to 8 years. So this will give you a very fair idea how the revenue of Genus is going to look like in next 6 to 7 years. If we don't take any business from today onwards, this will be the minimum revenue that can be looked at in the current scenario.
So just a couple of questions from my side on the order book. Now, you know, we are looking at a 12 times of a multiple, which was not the case scenario a couple of years back. We've seen a significant uptick in terms of order book, and this is essentially a play that we've started seeing from FY24 onwards. Just want to understand the kind of shift that has happened from FY23 to 24. And with the current bid opportunity also, the 27,000, almost a 27,000 crore of opportunity, this want to understand from this, what is the kind of market share that you aim to have in terms of new orders for the business going forward? I believe the Tamil Nadu order is also due, which has about 3 crore meters installation plan as well. So just want to understand this aspect as well.
Just to give you a heads up on the industry, that almost 23 crore meters were sanctioned by the government of India under the RDSS scheme. Out of this 23 crore meters, 14 crore has already been ordered. So out of this 14 crore, 3.5 crore has been received by Genus. So you can say around a market share of 20-25%. So we are one of the largest in the industry. And further, on the new orders coming, there are 3 large projects, apart from some smaller projects also being quoted by Genus, but 3 large projects which are quoted by Genus is, one is Tamil Nadu, which you said around 3 crore meters, one is BRPL Delhi, which is around 30 lakh meters, and one is BYPL Delhi, which is around 25 lakh meters. So in total, if we talk of 3 large bids which we have quoted in last couple of months, has been around almost 3.5 crore meters. And if you take a ballpark figure of, let's say, 10,000 rupees per point, so it is around 35,000 crores of tenders which are quoted by Genus, and we expect them to get decided in next 2 to 3 months. So, and it is very difficult to put a number that how much Genus will win. Genus always bids to win. We have been maintaining our leadership position from last 20 years in the metering industry, and we are confident that we should be able to maintain that.
Got it. So I have just 2 minutes, so I'm going to quickly ask you a couple of questions. One is on the opportunity size. There is no doubt domestically, are you also tapping into foreign opportunities? And therefore, give us the 3 to 5 year view for your investor. Top line of 4,000 plus crore FY26, where does it go in the next year, next 3 years and maybe the next 5 years, in your opinion? And where should margins lie? Because your product mix is changing. And therefore, how should one look at the margin number as well?
So we have given a guidance of 4,000 crore for this financial year, and with a guidance of 18 to 19% of EBITDA, we are pretty confident that we'll cross both these numbers, and we'll give you a even more closer to the end of this calendar year. We'll give a different guidance if we see a different things happening in the next 3 to 4 months. But we are confident that we are definitely going to cross this guidance. In terms of international business, we are working in some of the very strategic markets, and you will see right now, I won't say it's a very meaningful turnover in terms of 4,000 crores. The export business is much, much smaller. But 3 to 5 years, you will see a much meaningful revenue from the export business. The kind of work we are doing currently, you will start seeing 6 to 8 months down the line, you will see a lot of positives happening in the international market, and we are pretty confident a very meaningful number will start coming in 3 to 5 years. In terms of company's growth in next 3 to 5 years, I can more confidently speak about the next 3 years. I definitely see Genus growing 30-40% year on year for next 2 to 3 years. Beyond that, I won't be in a position to speak right now. But yes, we have a lot of long-term plans, but yes, you will see them unfolding in next 3 months, 6 months, 12 months down the line.
Understood. Okay, sir. Thank you so much for coming in and speaking with us. This is great. And it's very good perspective that we get. Completely out of time on this edition of KYC. Thank you so much, viewers, for joining us. That's all, folks. Thanks for tuning in to KYC only on NDTV Profit, for your profit. Stay with us.